Okay, the first thing that you need to do is to look at the operating profit, which is always given on the statement of comprehensive income. Can anyone tell us how much is the operating profit from the statement of comprehensive income? Okay, I'm gonna show you just now.
300,000.
300,000, all right? Let me show the statement here. So this is our operating profit. It's given as 300,000. So we're gonna record the 300,000 as our operating profit on the cash flow statement. So here you go, 300,000. Now, again, in this example, we are not given the loss on sale of an asset. I guess it's the same reason an asset was sold at its carrying value, but we need to confirm that. But first, let's look at the depreciation that is given. I'm going to share a screen. We are given depreciation as 84,000 rands. Can you all see the depreciation?
Yes.
Okay. Now let's record our depreciation, 84,000 rands. We're going to record 84,000 rands here. And then we're going to add 300,000 plus 84,000 rands. But before that, let's quickly check why we do not have any loss on the sale of an asset. Let me check. How was this asset sold? Yes, bullet point number 3, it says a vehicle with the cost price 144,000 and accumulated depreciation of 24,000 was sold at its carrying value. So if you have sold an asset at its carrying value, no profit or loss will be made. It means that you have exchanged an asset for the very same value it worth. So no loss in this case. All right. So now we have 384,000 as our profit before any changes in the working capital, 384,000. How did we get 384? We added 300,000 plus 84,000. So you can also add 84,000 here, but it's not necessary. This is the total of the adjustments to the non-cash items. Okay. Now we're going to discuss the working capital. We're going to start off with the inventory account. Inventory. After inventory, we'll discuss trade receivable or accounts receivables. And then from there, we'll discuss trade payables. All right. Let me use a different color for these ones. Gold and red. All right. Now let's quickly look at the inventory, the figures. We're going to compare the figures of the inventory. I think inventory is given here, information A. In the previous year, inventory amounted to 516,000. In the current year, the inventory amounts to 420,000 rands. So what happened to our inventory? Our inventory was sold. Why? Because we can see that inventory decreased from 516 to 420,000. So some of the inventory was exchanged for cash. Now, when we do the cash flow statement, how are we going to show this? We need to show it as an inflow of cash. Why? Because if you exchange your inventory, you will receive cash. If you exchange your inventory for cash, your cash will increase. So we're going to say 516 minus 420, and then the answer will be shown as positive. Here you go. 516,000 minus 420,000 rands. What is the difference? Anyone?
96,000.
96,000 as positive. It's an inflow of cash. Now let's discuss the trade receivables. And then after trade receivables, I'm gonna allow questions. Close these ones. They're disturbing. Now trade and other receivables from 360,000 to 504,000. The money that is owed to us has increased. In other words, we have sold goods on credit. Instead of selling goods for cash, we decided to increase the volume of credit sales. That's why we have a lot of customers who owe us. Last year, we had customers who owe us 360,000, but currently it's 504,000. Okay, so how will be the effect on the cash flow statement if trade and other receivables increase in value? Anyone?
It will be an outflow of cash.
It will be an outflow of cash. Why?
Because our basically our customers are owing us more.
Yes.
So we have more that's owed to us by customers.
Yes. So instead of selling for cash, we sold on credit. So if you sell on credit, obviously you are not receiving any cash during that time. So what is the previous balance? It's 360, right?
Yes.
And what's the current balance?
It's 504.
504 minus, 504 minus how much? 360.
Yes.
360,000. So what's the difference?
144,000.
144,000 in brackets. So let me quickly explain. Number one, the inventory. We have said there will be an inflow of cash because our cash decreasing, our inventory decrease in value. Last year, we had inventory that cost 516,000, but currently the value of inventory decreased to 420. So we have exchanged stock for cash. We have sold some of our stock and we have received 96,000. With trade and other receivables, we had people who owe us 360,000. But currently, our debt, the money that is owed to us, increased to 504. It's more like loaning people money. It's more like borrowing people money. So the money that is owed to us increased. Why? Because we have borrowed more money to our customers. So that's the reason why we have an outflow of cash, which is 144,000 rands. Now let's quickly look at trade and other payables. But before that, we can conclude with these two elements, with these two accounts, inventory and trade receivables. These accounts have the same element. They are both assets. So that's why the effect will always be the same. If your assets increase in value, your cash will decrease. If your assets decrease in value, your cash will definitely increase. But with trade payables, it's different. Its element, it's very different from the two. Trade payables is a liability, money that the business owed to other businesses or other people. Now we're going to look at the balance of the previous year and the current year for trade payables. Previously, money that was owed was 91,000. Currently, money that is owed is 180,000. So the business owed 91,000 previously. Currently, they are owing 180,000. What is the meaning of this? It means that the business took more stock on credit from its suppliers. So instead of paying, they decided to take goods on credit. So there was no exchange of cash during that time. So they did not pay any money. Instead, they increased their debts. So more stock was bought on credit from the supplier. Business did not pay any money. So how will be the effect on the cash flow statement? Can anyone explain? What will be the effect? In the previous year, we have 180,000, but in the current year, we have 180,000, but previously we had 91,200. Will this result in an inflow or outflow of cash?
This will be an inflow. It result in an inflow of cash.
Inflow of cash because it's more like borrowing money. With trade payables, it can be money or stock. So the business borrowed funds from a financial institution. Let's put it like that. So last year they owed 91,000. This year the business owes 180,000. So what is the meaning of this? It means that the business went to the financial institution again to borrow more funds. So if your debts increase, it means that you are borrowing more funds. Okay. So what's the difference between the two amounts?
800.
Is it 800?
No. 8,800.
88,800. No brackets because this is an inflow of cash. Any questions? So every time when you think of these two, the inventory and receivables, think of cash crusaders, because if you have assets in your home and if your assets decrease in value, it means that you went to cash crusaders to sell your assets. But if your assets increase, it means that you bought assets from cash crusaders. All right, what about trade payables? Always think of the financial institution. If the money that you owe increases, it means you went again to acquire more loan. So this one, always think of loan. Let me put it like loan or money borrowed. And then with these two, you can say cash crusaders. And then cash crusaders. So you know that if your assets increase, it means that you went to cash crusaders to buy second-hand assets. But now, if your assets decrease, it means that you took some of your assets and sold them to cash crusaders. All right. Now we're going to discuss the interest income. Are we given any interest income? So yesterday you were given interest expense, but now in this example, you are given interest income. Where can we find the interest income? Let's look at the information. Are we given any interest income? Let me see. Sorry. Yes, we are given interest income as 24,000 rands. So my question is, how will this be shown on the cash flow statement? Will it be an inflow or outflow? Remember, yesterday we said interest expense will be an outflow of cash because interest expense is more relevant to the interest on loan, the interest that you pay towards the loan. So because you are paying, we said it's an outflow of cash. But what about interest income? It's more relevant to the interest on fixed deposit, the interest that you receive from your investment. So will this one be an inflow or outflow?
An inflow.
Inflow of cash because you are receiving cash from your investment. But with interest expense, you are paying a loan, you are paying interest towards the loan. So it's obviously an outflow. But this one, it's an interest income, money that is coming in. Sorry. Dividends paid, I think there's a message. Let me see. Income. Thank you, Mr. Mkonza. Let's look at the dividends paid and see which formula can we use. Okay, we are only given this piece of information. It says interim dividends paid during the year amounted to 91,200. Let's check on the statement of financial position. There is no shoulders for dividends. So can you see that we're going to use method number 1 that says if you are given the dividends paid during the year, use that amount as your dividends paid. So how much was paid for dividends? 91,200 rands. This information. So we're going to use 91,200 rands. So I'm going to go here and say for dividends paid, we paid 91,200 rands only. I'm going to take questions after income tax paid. So let's quickly look at the income tax paid and apply the formula. Let's see if we can apply the formula. We need 3 amounts. We need this one, the company tax, and we need the SARS income tax from the current liabilities. Oh, I don't think we have. Oh, we do have the income tax payable. This is the income tax payable. So a very important question was asked yesterday as to how do we deal with the income tax payable if it's shown under current assets or if it's owed to the business. I said that you're gonna add that amount because it's an overpayment. So let's quickly apply the formula. The formula says that if you're given income tax under current liabilities together with the company tax under the statement of comprehensive income, you're gonna add the previous balance. You're gonna say previous balance plus the company tax on the statement of comprehensive income, then minus the current balance for the company tax, the income tax payable. So we're going to say 21,600 plus 96,000 minus 12,000. That's the formula. That's the only formula. That's the only basic formula you use to determine the company tax paid. Okay. So remind me, what is the income tax payable of the previous year? I just forgot. Let's quickly go. It's 21,600. This is the previous balance. 21,600. Now, what is the company tax? Let's go. I think it's 96,000.
96,000.
Thank you very much. It's 96,000 plus 96,000. And then the current balance, I think it's 12,000, right?
Right.
Yes.
Okay, thanks. Now, I said that, let's say if this 12,000 was shown under current assets as the income tax payable, that would mean the business overpaid SARS by 12,000. So these 12,000 will be shown under current assets because it will be more like a debt, money that is owed to the business. So that's why it will be shown under current assets. But in this case, this amount is shown as a liability. So we minus if it's a liability because it was not paid, it's still owed. But the only amounts that were paid is 21,600 together with the 96,000. This one, it's still owed. That's why it's shown under current liabilities. But if the last one, the 12,000, was shown under current assets, we were going to add it here because it would mean it was overpaid. Okay, let me quickly look at the messages. Thank you very much. Minus 105,600. I'm going to take questions. Anyone who's still confused? 105,600. Double check. Yes. Questions, please.
Is there a reason why you put the brackets?
Okay, because it was paid, so it's an outflow of cash.
Oh, so outflow we put brackets, but inflow
Yes.
no brackets.
Yes,
Okay.
yes. As you can see,
Alright.
this one, it's an income, money coming in, so there are no brackets. But these two, it's money that is going out. It's money that is paid out. So that's why there's brackets, because it represents outflow of cash. The cash is going out.
Going out. Okay.
Outings. The cash is
All right.
going out for lunch.
Okay.
Can I ask something?
Yes, please.
I see you in depreciation. I'm just going to go back a bit.
Yes,
Depreciation is
please.
84,000, right?
Yes.
And I see here there is a sort of a note to say a vehicle with that cost price of 144 and accumulated depreciation of 24,000. Are we not considering that for doing calculations for depreciation? And why not if we're not considering it?
Okay. So the 84,000, it consists of all depreciation for all assets. So you see the vehicle you're talking about, its current depreciation is already included in the 84,000. Say, for example, you have 5 non-current assets. When they say depreciation, they include all amounts for those depreciation. So
But how would I know in an exam if that comes up?
all right. So it's how can I put it? But you should know that when you see depreciation, it means each and every asset's depreciation is already included there. So there will be no need to calculate the current depreciation for any asset, because if they give you depreciation in the statement of comprehensive income, it would mean that each and every asset's depreciation is included there.
Okay. So what's the reason that they're putting a note there? I'm just asking, just so I can get clarity. I don't want to get confused in the exam.
All right, no problem. What is the reason why?
They put in that note there for the depreciation of that vehicle.
Okay, let's quickly go there. Where is the note? Oh,
There, just additional information
okay.
where it says equipment, a vehicle with a cost price of 140 and accumulated depreciation of 24,000.
Yes.
Yes, so we're not considering that note for the statement of cash flow.
No, when we do the depreciation, we're not going to consider this information.
Okay, noted. Thank you.
All right. More questions, please?
Good evening. On the note of depreciation,
Yes.
does it happen in an instant where you're not given anything
For depreciation,
on additional information regarding depreciation? Like this one of a vehicle would cost 144. What do we do if there's nothing given here?
as depreciation.
Yes.
Okay.
The only depreciation is shown on the comprehensive statement.
Okay, I get what you're saying. So your question is, what happens if we are only given a cost price, for example, but we are not given the accumulated depreciation?
Yes.
Okay. So,
And vice versa,
okay.
if it's possible. Yeah.
All right. So if they give you the cost price only, they will also give you the carrying value. So it's impossible to be given the cost price only. Okay, let me take you back from yesterday's exercise. If you can remember, they only gave us the carrying value of that equipment that was sold. So now in this case, they gave us the cost price together with the accumulated depreciation. What is the reason for that? It's because they want us to calculate the carrying value. So is it possible to be given the cost price only? No, it is not. The only thing that you can be given is the carrying value, just like yesterday.
Okay, but then back to the lady's point earlier on, right?
Yes,
And we look at this paper, right?
yes,
And the notes are saying additional information
yes,
on the depreciation.
yes.
And if you look at your sheet on top, it says add depreciation. How do I know that I shouldn't consider this point here, the third point? How do I, like, because the moment I see depreciation,
Yes.
I think that I need to do something. I need to, I must do a calculation, or I must make an adjustment or something like that. So how do I know that with this point here, nothing needs to be done nowhere? Or does
Alright.
something need to be done?
Before I answer that, I want to make sure if the question before yours was answered correctly.
Yes, it was answered.
Okay, thank you. Now, coming to your question, you see the difference is what? The accumulated depreciation and depreciation. These are two different accounts. So when you see the depreciation in the statement of comprehensive income, you should know that that is the depreciation for all assets, for all non-current assets, for all fixed assets. But if you are given the accumulated depreciation under additional information, it would mean that there's a specific fixed asset that was sold. So it is impossible to be given accumulated depreciation for any asset beside the one that was sold.
Can I maybe also ask something here? Last week we spoke of the non-current asset purchased,
Yes.
and we made a calculation there. Is it related to depreciation still? The
Okay.
carrying value at cost price, the depreciation. We had to find something here. There was certain amounts that were not given, where we had to calculate and find them.
All right. Okay. But before I answer that, let's quickly go back to the previous question. The question is, how would you know that this depreciation does not affect the one given on the statement of comprehensive income? It's because this one is relevant. It's specific. It says that a vehicle with a cost price was sold. So this one, it does not affect the depreciation that is given on the statement of comprehensive income. The depreciation that is given on the statement of comprehensive income is inclusive of all fixed assets. It means that this equipment that was purchased, let's assume it had depreciation. That depreciation is included there. This vehicle that was sold, it also had a depreciation. That depreciation is already included there. So what's the difference? The difference is that depreciation is a sum of all your non-current assets depreciation. But with the accumulated depreciation that you see here, this one is specific because it's for the vehicle that was sold. Accumulated is the total depreciation from the previous year. So this vehicle, it has lost 24,000 rands before it was sold. What is the cost price? It's 144,000. It was bought for 144,000, and then during its consumption over the years, it lost a value of 24,000 rands. So when you look at this depreciation here, this is a sum for all your non-current assets. Your equipment is included here, your vehicles are included here. It's a sum of all your fixed assets. So to answer the question in short, this accumulated depreciation, it does not affect the depreciation. You should not consider it. A confirmation of whether I did answer.
Thank you. Yes, you did. Yes, it's clear.
Okay.
Thank you.
Now I'm gonna go to the next question. The next question, if I can remember, was how do we find, okay, you can rephrase the question again. You can ask the question again. I think I forgot.
Okay, yeah, the question here was regarding the non-current assets purchased.
Yes.
Is that related to depreciation? Too?
In which information? Information C, information 3.
No. Looking at the notes that we did last week,
Yes.
when we were calculating non-current asset purchased,
Yes.
you've given us a formula of calculating the carrying value.
Yes. Okay.
Is it related to depreciation?
Yes, the depreciation is part of the formula. Which depreciation? This one. This depreciation is part of the formula for calculating the non-current assets purchased. I hope you are answered.
Yeah, I know I'm answered.
But that doesn't sound convincing.
No, I am answered. I'll have to do it on my own, and maybe I'll have a question next time.
Okay, okay.
Cutting.
All right, no problem. So now, which information affects the non-current assets purchased? It's this one. Remember I said here you need the carrying value of assets sold and that depreciation. So to answer your question again, yes, the depreciation that we're talking about here, this 84,000, it affects the calculations of the non-current assets purchased. As you can see here, bullet point 2 says equipment was purchased for cash. So we're not given the amount. To calculate the amount, we're gonna need that depreciation of 84,000, and we're also gonna need this information, but we'll discuss that further. Now let's quickly go back to our cash flow statement. Okay, now we can calculate the cash flow from operating activities. First, I need to find the working capital changes. How do I work out these capital changes? I'm gonna say 96,000 plus 88,800 minus 91,200. Anyone, please? How much is the answer? What is the difference? 96,000 plus 88,800 minus 91,200.
I'm getting 892,800.
892,800. In brackets,
No,
is it 89,280?
no, it's, sorry, I calculated wrong. I calculated 800, sorry.
Okay,
Is it
So-
not 93,600? No, no.
93,600. Let's
Is
double
it
check.
that?
Yeah, 93, yeah, she's right, 93,600.
No brackets. It's not
No.
I
new.
think no brackets.
Okay.
No brackets because 96 and 88 is already a higher amount than the 91,200.
Oh, perfect. Now, how do we calculate cash generated from operations? The answer that you just got, 93,600, and sorry, it's probably 384 plus 93,600. What is the answer?
Wanted 477,600.
477,600. Any questions? But now we need to get the total. Here we're going to say 477,600 plus 24,000 minus 91,200 minus 105,600. What is cash flow from operating activities? How much is cash flow from operating activities?
I'm getting 304,800.
304,800. Any questions?
Evening, Mr. Mtombeni. I am lost on where did we get on the cash flow generated the 93,600.
Okay, no problem. How did we get 93,600? We said 96,000 plus 88,800 minus 144,000 rands. Is it? But here, where did I get this 91,200?
And I
And the
also had
dividends
the
paid.
same question.
Oh,
You took the dividends paid.
dividends paid. So it's no, to get working
Not, are we
capital.
not supposed to be calculating those amount inside the square?
Yes,
And
yes, I think I made a mistake here. It's
Yes.
supposed to be 144,
44.
1, 2, 3. Yes, thank you very much. How much do you get?
136,800.
136,800.
800. No. No, it's wrong. Sorry. I missed 2 zeros.
40,800.
How much?
40,800.
40,800. All right. So how did you get 40,800? We said 96,000 plus 88,800 minus 144,000.
Yeah.
This box here, this is the combination. It should give us the working capital. Then to get cash generated from operations, we're gonna say these 384 plus 408. So let me remove. Sorry, my mistake. 40800. How much should be the total?
4,200.
4
424,800.
424,800. All right. Now we need to change. It's not 47.7. 424,800. What should be the total here? 424,800 plus 24 minus 91,200 minus 105,600.
252,000.
252,000. Okay, thank you. Any questions?
Mr. Mtombeni, is it also correct to when calculating the working capital change
Yes.
to say 96,000 minus 144,000 plus
Yes.
88,000?
Yes, that's
The both
correct.
marks.
Yes, it's gonna be the same. Yes, that's also correct. I think we should put it like that so that it becomes simple. Minus and then plus 88,800. Yes, 88,800. So it's 40,000. Now, under cash flow from investing, you see the most important item under this section is the non-current assets purchased or fixed assets purchased. So this is the only serious calculation on your cash flow statement. Everything is just simple, but when it comes to non-current assets purchased, that's where the problem starts. But it's simple if you apply my formula. All right, let's quickly revise the formula. The formula says add the carrying value of the current year with depreciation and the carrying value of the assets sold. Now we're gonna use a whiteboard. Let me quickly share a whiteboard. So this is the formula. Carrying value of current year what is it that you're gonna add? The depreciation that we spoke about, I think it was 84,000 if I'm not mistaken, plus the carrying value of asset sold. Now, what is the cost price of the asset sold? Let's go back to the information.
Isn't it 144?
144, yeah.
It's 144,000, right? The accumulated depreciation is 24,000. So to work out, oh, I can't type here. Oh, it's a PDF. So to work out the carrying value, we're gonna say 144 minus 24,000. Now let's show that on our whiteboard. 144 minus
24. It's 120.
120.
144, yeah.
144 minus 24,000 should give us 120. This is the carrying value of the asset sold.
Another 0.
Oh, sorry. Another 0 here. Okay. What is the carrying value of the current year? Let's quickly check. Now we're going to look at the fixed assets, the non-current assets in total. You remember yesterday, I said that because those fixed assets were given as a single amount, there was no accumulated depreciation on the statement of financial position. And I said that amount, it represents the carrying value. So what's the difference between the question paper we're doing now with the question paper we did yesterday? The difference is that with this one, they gave us the cost and the accumulated depreciation. But yesterday, we were only given the carrying value. Say, for example, you are not given accumulated depreciation and these words in brackets. That would mean property, plant and equipment of 96,000 is the carrying value. But now they have specified here, they have indicated cost. Once you see cost, you need to look for what? For accumulated depreciation to work out the carrying value. How do we calculate carrying value? Cost minus accumulated. So be careful. If it says cost, you should know there's accumulated depreciation. But if it doesn't say cost and you don't see accumulated depreciation, that would mean
The carrying value.
the carrying value. So they did things simple for you. Everything was calculated for you. But now in this example, we need to calculate the carrying value. Now, what is the carrying value of the current year? This is the current year. To calculate the carrying value, we're gonna say 996 minus 252. Let me quickly go back to the whiteboard. 996 minus 252.
$744,000.
Okay, 996 minus 252 is equal to
44.
744,000. This is the carrying value of the current year. Can anyone help us calculate the carrying value of the previous year? So, as per the formula, you need to minus the carrying value of previous year. What is the cost price of the previous year? How much is the cost price?
648.
648,123. What is the accumulated depreciation?
Minus 190.
192. What will be our carrying value?
$456,000.
456,000. Now we can work out how much was purchased by saying 744 plus 84 plus 12,000 minus 456. This is the only formula. Make sure you master this formula. It will help you work out the non-current assets purchased. What is the difference? So let's quickly show here. 744 123 plus 84,000 plus I don't remember. Oh, I think it's 120,000, the carrying value of the assets sold, minus what is the carrying value of the previous year?
456,000.
456,000. So how much did you get as your total?
492.
In brackets, 492. Why in brackets? Because we have purchased. You see, with purchased pay, there's outflow of cash because we are spending money. But with the income, with the profits, it's inflow of cash. Any questions?
Yes. So there were you minus the carrying value of the previous year, the 648,000, right? On the information sheet itself, did it have cost there or didn't it have cost?
Which one?
So the value that you got, the 648,000,
Where is the
where did you get
648?
that? Under your, where you minusing on your whiteboard?
Okay, let me.
It comes from the statement of financial position
Yeah,
under
but
the assets,
under the
under
assets.
property, plant and equipment. I think so.
Yes.
So yeah, so that one. So it comes from assets. But did that have cost in front of it?
Okay, let's quickly.
Am I making sense?
Yes, I get what you're saying. Yes, you see, it says
So it
cost.
had cost in front of it. Okay. Okay, so we still have to do. Is that why we did the calculation in the bracket, right? Because it had cost in it. So and then we minus, okay, so we minus the 192. Okay, I just needed clarity on that.
Okay. All right. So the next item, if there are no questions, will be this one, the long-term investment. It also falls under the investing activities. Last year, you invested 180,000. Currently, your investment is 264. You have increased your investment. And do not forget, the investment, it falls under assets. And what is the golden rule for assets? If the value of assets increase, it would mean that money was spent. As a result, there will be an outflow of cash. So you had investment of 180,000, but currently your investment is 264. No money was given to you. It's you who took the money and increased your investment. You have increased your investment. As a result, your cash will be affected negatively. Outflow of cash. So now I'm going to give you time to complete the whole cash flow statement, and you can check with me if you are not sure about some of your answers. Okay, that's it for today. Thank you very much. We're going to meet on Saturday, same time, and Sunday, same time.
What time on Saturday?
Is it afternoon?
Yes, at 7, because